This business about gold bar levels.
In my last Bitcoin video, when Bitcoin was priced at 34,000, I predicted the pump saying we were going to go to 177,000. This was when we were in the bear market. In this video, I'm going to show you the time component to Enigma and how both time and price came together to forecast a Bitcoin pump. So, if you haven't seen my video, I published it 4 months ago when Bitcoin was at 34,000. I showed via Goldback how the logical target for Bitcoin was 177,000. And we've moved from 34,000 to 177,000 since then. Now, this is not financial advice, but obviously, if you had bought a Bitcoin at 34 grand, you would be very well placed for this Bitcoin bull run. Okay, so this is something I'm going to share that I don't think anyone has ever shared on YouTube before. Now, while what I'm teaching you today is brand new information, I teach a very, very detailed understanding of time and price in my private mentorship. So if you would like to join my Discord server, which has my mentorship videos on time and price, then there's a link to the waitlist in the description to this video. Now, this is the chart for Bitcoin. Here is the weekly. Now, it's important to understand that both time and price are fractal. Okay, so just like how I showed that there are macro dealing ranges for Bitcoin, and the dealing range that we're currently in has a target of 177,000, there's also a time component. And unless you know the time component, it is very difficult to nail the price and the exact entry. So this particular teaching will show you the higher time frame cycles that Bitcoin runs to. And the Bitcoin higher time frame cycles run on the yearly. Now, this is an extension of quarterly theory that I have never taught before, but I will show you how Bitcoin runs using quarterly theory on the yearly. So first, let me mark out the beginnings of each year. This is the weekly chart. So we have the end of 2020, the end of 2021, the end of 2022, and the end of 2023. This is where the 4-year cycle started. Now, when it comes to quarterly theory, we have 4 quarters, and we either have an accumulation, a manipulation, a distribution 1, and then a distribution 2, or we have an X, then an A, M, D. So a lot of people got into the Bitcoin cycle during 2021. And if we map out this yearly quarter, this is the range. Now, it's unfortunate that a lot of people bought the top. What was the purpose of this price action? Okay, this price action was purely an accumulation, right? It was to create liquidity at the bottom and the top of the range. We then had the dump. So the purpose of 2022 was a manipulation of the lows. Okay, so all that liquidity, all these stop losses, and all the fear was magnified when we swept these lows. Okay, this was the purpose of 2022, the manipulation. Okay, a lot of people sold at these record lows, and we went all the way down to around 15,500. Okay, once we'd swept these lows, if this is the accumulation, this is the manipulation, what was the purpose of 2023? 2023 was the initial distribution. Okay, so we had liquidity above Q1, we had liquidity above Q2, and the first step was to sweep Q2's liquidity, but the ultimate aim, which was realized in 2024, was to sweep the liquidity of Q1. So this quarter has not finished yet. Now, if you look at my Bitcoin video, using Goldback, I show you how we could have predicted this price action in terms of where price was going, and we could have had some very, very nice entries. And we know the logical high is 177,000 of this dealing range. So I'm not going to go through that now. If you would like to learn about the Goldback dealing ranges for Bitcoin, then have a look at the video on my YouTube channel. If you would like to learn more about Bitcoin and Goldback, then there's a link to Hoppy's official Goldback book in the description to this video. Now, I'm going to give you some more precise information on how you could have predicted the low of 2022. Right? The quarterly theory also respects standard deviations. Okay, so if we pull the standard deviation of Q1, ignoring the wicks, okay, just focusing on the candle bodies, because that is where the true price action is. You will see that we touched almost the 1.5 standard deviation. Now, depending upon the chart you use, right, you will hit the chart. So if you have a look at a bit stamp, you may touch before we reverse, okay, because these prices do differ between exchanges, okay, but the underlying algorithm is exactly the same. This is how you could have used Goldback to understand where you could have entered. And again, have a look at my video. It shows the correct order blocks and fair value gaps where you could have had a low risk buy. And also, quarterly theory would tell you the time that you could have bought. Okay, we know we would have bought in the manipulation where Q2 manipulated the lows of Q1, and using standard deviations, we will have seen that this was the area for the low. And then combining with Goldback, we could have had a precise fair value gap entry. Right? If you would like to learn my time and price golden bullet strategy, which I teach for Forex, then there's a link to my mentorship program in the description to this video. You will have to join the waitlist though. I'm now full again. So if you join the waitlist, as soon as someone leaves, if someone leaves, the next person can join. If you have any questions on any of my teaching, feel free to leave a comment below.